In this context, I'll just talk a little bit on the market outlook. I'm Sunil Shah, the head of research for Access Securities. I talk on behalf of my entire team. So broadly, currently in this context of the market, what is happening is that we are seeing huge amount of correction come in. The main reason for this correction is largely attributed to the global factors. In the last 2 months, we have seen two major events which have happened. The first one is clearly the rising interest rate in US, and recently it has been the depreciation of Chinese currency. Both those factors have resulted in FIIs getting negative on most of the emerging markets, and India is also not an exception. So India is also facing the burn of the global events, and FIIs are actually going about selling stocks in the Indian markets. The biggest impact of all of these has been on the banking stocks. They are the ones which were aggressively and overly owned by the FIIs, so we are seeing selling pressure come in there. To add on, there have been also domestic factors which have not worked in the favor of the markets. Politically, not much happened in the winter session, and the results which are just coming in are also muted. The expectation which is there on the Sensex EPS numbers is more or less likely to be just about 1% growth in the December numbers. So the results are also not so encouraging. The expectation is not very high, and that is what is resulting in the markets correct. So it's multiple factors all cobbled up together at this point in time, whether it is global environment, whether it is Indian political, whether it is corporate numbers. All of that is resulting in the market behaving in this fashion. That is a pretty myopic view. It is more of looking from a very short-term angle. But if we go beyond and have a telescopic view or try to look markets 6 months down the line. So the way in which today we are having all those negative factors, perhaps 6 months down the line we will have more of a much positive environment. I think if we look at the political leaders, the portfolios which are handled by the political leaders at this point of time, they seem to have huge amount of appetite for growth in their respective sectors. Whether we talk about the road portfolio, whether we talk about the railways, whether we talk about even the power sector. So all of those where a lot of things are happening on the ground, I think over the next 6 months will get translated into the numbers for the companies. Near term we are having the budget, so till that time we'll be in that uncertain territory. In the next month and a half, we'll be moving in sync with the environment at a global level. But if we cross that period and go forward, I think by June or July there will be a lot of positive triggers in the market. The first one will come in terms of the rollout of the 7th pay commission. The fund flow which will start coming in will result in huge amount of consumption demand. We will also see OROP money getting in the hands of people. So we'll see demand come from that side as well. Also, there is expectation that this year, unlike in the past where we had the El Nino impact, this year we are expected to see the contrary, which is the La Nina, which is going to be a bountiful monsoon. So all of that will come into play in and around June and July. So it will be multiple factors then which will be on the positive side as we are seeing the negative factors today. So what is also important is to understand the valuation in the market. Currently we are trading at almost the mean valuation of about 16 times. That's pretty moderate valuation. Also, if we see the index numbers and if we see the Sensex, mid cap and the small cap indices, all of these three indices before the outcome of the May general election, if we look at that normalized graph and put all of them at 100, then in today's context the Sensex is trading at below those levels. So the expectations which are there are actually filtered out. That's really not there in the price. So it calls for being overweight. We need to always remember that when people are fearful in the equity market, it is actually the time to be greedy. And when they are actually greedy, it is the time to be fearful. So broader people, broader masses are fearful to look at even equities. So we think it is a time to be more greedy. As we mentioned, there will be positive triggers which are still 6 months away. So the month and a half should be used to accumulate good quality stocks. We had recommended earlier few stocks in our outlook for 2016. I'll just do a small recap for those so that you can nibble into it. You can start gradually adding it to your portfolios. Each one of them has their individual stories. First off, there is Aurobindo Pharma. We think it has got a great product pipeline laid out for 2016. The molecules that it is working on and the US FDA approvals that they are getting is a significant, and that will translate into numbers for Aurobindo Pharma. The second is Bajaj Finserv. We think that the insurance story is going to play out. We'll see companies in the insurance space getting listed over the next 6-8 months. And Bajaj Finserv will be one which will be a big beneficiary out of the valuation which will be listed for other companies. So on a comparison basis, I think Bajaj Finserv will do extremely well. We have companies like eClerx which are available at extremely attractive valuation. The company is generating an ROE of 35% plus, and eClerx is trading at a multiple of close to 13-14 times. So it's a very attractively valued stock, and I think eClerx can be there as one of the other candidates. IGL, that is Indraprasth Gas. Now what we all know is the event which is happening in Delhi, and most of those vehicles will have to shift to CNG. So IGL, which is Indraprasth Gas, is a virtual monopoly there, and we think that over the next 12 months they will show extremely strong earnings growth. So IGL, which is Indraprasth Gas, is another candidate. And the fifth one which we had identified was Reliance Industries. Reliance Industries is complete contrary call to the market even today. It is the one which is holding on. Reliance Industries, we think, is a great 4G story, and somewhere around April or May that will get rolled out. So we think that these are the stocks, these are independent of the market. These are the stocks which have their own stories, and so you can use market as an opportunity to buy into those stocks because those prices are available at a much attractive valuation. So I think that is what I had to say. As I mentioned, a lot of headwinds in the market in the near term, but use these headwinds to accumulate stocks from a long-term perspective. That is a short view which I had, and thank you very much for listening.